Hello and welcome back, guys. Once again, I wanted to make a video and talk a little bit about meme stocks. And meme stocks, in case you are not aware, are these companies that are not really doing well financially. In fact, they are, for the most part, doing the opposite. They are doing horribly bad. And they are still going upwards, or they have actually absolutely blown it up at some point. And people are actually flocking around these and, potentially buy these, expecting for them to get higher. Companies of that sort are like GameStop, AMC, things of that sort. Bed Bath and Beyond was the most recent one that also imploded lately. And I kind of wanted to talk about this because I can potentially maybe save a few people from potential danger here. Now, the thing with these companies is that, what I said earlier, they are not doing well. If you take a look at the financials, you will basically see red. It's a sea of red here. Insane dilution, losing money, losing free cash flow, insane debt here, revenue that is going down. There's nothing worse. It's a picture of horrible financials here. And of course, you can dig deeper, but you will see again a sea of red here is what we are seeing with AMC. Yet if you take a look at the 6-month chart, you will see that it had some upticks over here, like really vast ones. Then it went down insanely, and then it went up again. The reason why this is happening is that traders actually are piling up on the stock when it goes down, and traders are actually selling the stock when it goes too high. And this also has a lot to do with the market conditions at the time. So if we are at a bullish pretty much week or something of that sort, or a month maybe, then you are looking at more people buying. And if we are at a bearish period, then more people are selling. And this goes up and down. Now this is almost trading like a crypto scheme here. And crypto is also another one of these stories where there is nothing backing up an actual crypto coin. It's only about what people are willing to sell it for and what people are willing to buy it for. It's basically an exchange, and people are actually pretty much negotiating and for no reason exchanging this stock, expecting to make more money. It's the greater fool theory, trying to find the next fool actually to sell your shares to. But at some point, if it goes too high, then it starts dropping again and again. When it goes too low, maybe people start buying again, and this is how it goes. But it's extremely dangerous, especially buying in the highs, of course, because as you see here, for instance, at some point we're at 24, now we're sitting at 10 like 3 days later. Nothing has changed fundamentally in terms of the company. It's all about pretty much the trade. And you can take a look at the stock news here, and you will see that AMC stock plunges following the debut of Ape shares. These are some preferred shares that they have actually added to the market here. It's irrelevant. This is not really the reason. There could be any reason, really. It could be raining outside, and these kinds of stocks could be going down because, again, they are trading depending on what the sentiment is and what people at the moment are thinking about in terms of the stock. And also, as I mentioned earlier, the current market conditions matter a lot. This is not a company really that makes any money. It's again all about what people are willing to buy and sell it for. Now, similarly, you will see here BBBY, Bed Bath and Beyond, is another one that has pretty much has been doing the same thing. And similarly, this is down 16% again today. And you will notice that, again, same story, going up, going down, going up, and then going down again. There's nothing to pretty much trade here in terms of finances and financials. Take a look at this. This is actually horrible, apart from the fact that they have been buying back shares. But when you are not making any money, why are you even buying back shares? I mean, you're not making any money. You're losing money, and you're negative free cash flow, yet they're still buying back shares. So why would you do that? This is the only good thing, but again, if the company is not making money, it's irrelevant, frankly. And again, it's the same story. It's a meme stock that's not making money. It's a potential risky company and would potentially bankrupt. In fact, I think there is more chance of it bankrupting than actually staying alive, for sure. Same thing with AMC. I think it's the same story, potentially. And these kinds of companies are really dragged down right now, and they could potentially bankrupt. And people are actually buying these. They're getting a lot of hurt if they actually do that and hold these for the long run, because they can go down steeply. And especially if these kinds of financials continue and the company somehow doesn't reverse its course, it's going to be horrible for them, and things are not going to be looking well for them at all in the future, and especially their investors, of course. And I kind of wanted to compare this kind of move here, this kind of price movement, with Dogecoin. Remember Dogecoin? This was one of the pretty much high yield cryptos of last year or so. Take a look at this one. This was basically zero for many years here. Pretty much every year and every month and every day it was zero. And then at some point some news started happening. Now remember, this is not a company. This is nothing really. This is just air. This is just basically nothing. It's just a digital asset that is not even an asset really. I mean, an asset, you can say that it's every possession, but is it really? I mean, an asset should ideally be making some money for you if we're talking about a financial asset, or at least it should have some sort of a use. And this is basically useless here. It's just, again, the greater fool theory, what somebody else is willing to pay to get it. And so it went high, very high. Remember the Dogecoin millionaire at some point, a person who had more than $1 million in terms of money invested in Dogecoin, and they never sold, and they are still holding, I believe, which is a huge mistake. And yeah, this has dropped down significantly. It's still not here, over here. It may not go that low, but I wouldn't be surprised if it goes over here for sure. And again, this is a similar movement to what you could for sure see in meme companies. You could again see those plummet, and you are seeing these plummet. They may not plummet to zero yet, but they are plummeting a lot. Again, if you take a look at what is happening here, you will see that they have been plummeting a lot, substantially. And again, these kinds of companies are very risky to own. And GameStop is another one, for instance, that has been one of the prime targets in terms of meme stocks, really. Everybody knows about this one. And this one is also down today again, not as much as the other ones, although its financials are also horrible here. This is another company that you really shouldn't be owning as a long-term investor. It's extremely dangerous here. Take a look at this one. Again, this had a similar move over here. This almost looks like Dogecoin. Take a look at this one. It's almost the same thing, almost negligible here, and then all of a sudden there is this insane uptick, and then from that time on, there's going to be ups and downs, because that's what happens with this kind of trending, or trendy, I should say, instruments, trading instruments. They're not real investments here. And if you take it to 1 year, you will kind of see that's it's about the same story here. A little bit of a down move, then an upwards movement, downwards movement, a little bit of an upwards movement, then again same story, up and down, but overall going down is the thing that you are looking at here. And yeah, you're kind of seeing a very similar story here. So yeah, I kind of wanted to make this quick video and potentially help some people who are thinking of adding this to their long-term portfolio. Not a good idea, guys. Rethink about doing that. It may be a good idea to actually sort these ones or potentially even take them for a buy during the day, like as a day trade. But personally, I wouldn't hold this for more than a day, frankly. I would only day trade these and make sure that I didn't have any on my plate after the market closed, pretty much, because anything could happen during that time, and I wouldn't want to be taking the risk. These are very risky instruments to be holding right now, and so I would definitely avoid. I hope this helps you a little bit, that gives you some ideas. You can kind of use our tool here. Remember that you can become a patron and get full access. You can find links in the description box below this video. But if you do that, you can kind of see all the financials here about this company and see how pretty much horrible these companies are, and why they have pretty much no position in an actual value investor's portfolio here. Again, it's all about potentially trading, making the quick buck, and then letting them go, because they again don't make any sense to be holding for the long run. It's super risky here. Okay, so thanks for watching again. I hope you enjoyed this one. Remember to like this one if you did enjoy it, and subscribe if you're not a subscriber already. And also, in case you haven't joined yet, you may want to take a look at our Discord channel. We are discussing there pretty much every day. We have pretty much some people here, a group of people that are always around, including myself. And we're always talking about all sorts of different and nice pieces of information and news revolving around the stock market. So it's nice to have you around. It's some nice discussions to be around too. So thanks for watching again, and I'll see you in the very next video, guys. Bye bye for now. See ya soon. See ya.